Eric Muathe, Muathe.com, with yet another follow through of this series. I wasn't actually planning on continuing on this series, but I want to show you what's going on. This is just the same day as part 12. And again, we are looking at the markets here, June 3rd, 2015. Market's been trading for about 2.5 hours, actually about 3 hours. And now we are up only 52 points on the Dow. Earlier in the previous video, we were up 146 points on the Dow. So the market has come down, presents us with an opportunity. Remember, this is short-term trading. Those of you who like to trade intraday, like to look for scalp situation, short and long, here's another example of how markets are tricking. Number one, remember I talked about the possibility that the market was breaking out earlier during this period, and the price was here, looked like a good breakout. But take a look at what has happened. A couple of observations. Number one, always be aware whenever you see uniform action. So we went above this line with uniform action and back below it. It looks something like this, like a U. Uniform action back below it. Whenever you see uniform action and back below a breakout line, that tends to be a sell signal by itself. Also keep in mind, we also see that the line we were watching for potential break or make, so this line here, the market went above the line and back below it with uniform activity. Looks like another U-type inverted U-type formation. So that was a trap, and anybody who was looking to scalp, once the market moved back below that red line, you knew that maybe this was going to be a pullback. We discussed that in part 12. So that makes sense. So in other words, what the market did is, just to explain here, the market went above that line, went above it and back below it with uniform action. At that point, back to the below the line was a sell signal, which is this period here. So that's uniform action. At the same time, we see this other red line that I'm going to draw in a different color here. Same thing happened. So in other words, there's also this line, something like that. And again, even here the market went above the turquoise line and back below it. That was indication short term that the market was about to turn down, and that's why the market's been down since. So that made sense. So from a short term perspective, the bearish aspect short term that we're talking about is taking place. But now, a couple of minutes, maybe half an hour later, we are back to this level, which has been support. And also the same level is back to this level here, which has been support. So as of right now, I suspect if this can hold, guess what? We start moving higher again. And that's why short-term trading is very difficult, because you really have to be on cue. You have to be watching all these variables, all these things taking place. But most of it is going to be telegraphed on the RSI. And so a couple of observations, so to kind of put things in perspective. Right now we're looking at the SPX, which is trading at 51, having started the day yesterday, closed at 49 and I think 58. So it's still trading above 51, suggesting a strong day. It's still above 50 for the day, suggesting a strong day. So that 5-minute support again could be indicating that, because more than likely it could be a strong day, that this support can be used for an entry for a swing trade or for a scalping trade higher. Right there, take a look at the Dow, and I want to point out here on the Dow is not above 50 now. Early in the day it was above 50. At that point it was up about 145 points. Now it's only up 67, 68. If the Dow is to have another strong push, it needs to move its daily RSI above 50. Also, something I need to point out here, and I think I haven't done this enough in my videos, is whenever you see the market, and let's take the example of, let's call this line here 50. So let's call that 50 period on the 50 level on any time frame. Whenever you see a market, for example in this instant, early in the day the Dow was up above 50, indicating a strong day. right? But right now we are not above 50, we are still staying below 50. If we don't move above 50, the indication, it's a subtle indication that the market is not as strong, because why else would it struggle to have a good day? So in other words, whenever you have a push above or below the 50 line, you want the market to stay in the direction to confirm the trend. Otherwise, if it fails, like right now the Dow is back below 50, we haven't closed for the day, so it has failed to stay above 50. This sometimes can be an indication of a lack of momentum and could actually suggest swing trade lower is possible. Hope that makes sense. In other words, the attempt to move above 50 on this day, if it fails to close above 50, could be indicating subtly that the market is losing its momentum, and maybe in the internal working of the market it could actually fail to move above 50 day to day and roll over. So that's one thing I need to mention, that sometimes that failure to hold above or below 50 whenever you're moving above or below 50 could be an indication that the market is stalling. For example, and I'd like to spend a second here, is if we were looking at a market early in the day moving below 50 on its daily RSI as an example, and this is true for all time frames, if the market was below 50 today, moving below 50 today, but it failed to do so at the close and stayed above 50, did not close below 50 on the daily RSI, it suggests that there is a subtle change in momentum and that potentially the market could be looking to move higher. Now, that's one thing I need to point out. Second thing, observation wise, in terms of odds, sometimes it takes 2 days or 2 periods. In other words, the day one to move below 50 could fail, and so it could stay and close just above 50, and then on the next day it finishes the move and you still have that big day. Or like today, maybe it fails to close above 50 on the daily RSI, but tomorrow or the next day it could finally get that move. But again, it is the move above or below 50 that records a big swing in the price, either down or up. So if you're moving above the 50 line, you're having a big session on whatever period that is taking place. It could be the hourly, the 30-minute, the daily, the monthly, the weekly. And also conversely, if you're moving below 50 on any time frame, expect prices to show a big period or a big session. And so that's all I'm getting at here, is the Dow, if it's gonna have a strong close, needs to stay above 50. The failure to move above 50 today, if it fails at the end of the day, could suggest that maybe the market is losing momentum, and instead of moving higher as indicated by this support, failure to move above 50 sometimes can suggest that this is lack of strength and that you are actually going to break that line. So sometimes the move and above, below, the swing, the slashing above the 0 line or the 50 line, excuse me, can be an indication of what's going on. So we need to watch for that. But for now, it's a split, because S&P 500 is above 50. Unless each two cannot hold above 50, if both of them cannot sustain their moves above 50 today, the indication is that the market is losing momentum, and that could be an early sign that potentially even this line could break. If it can't move above 50, then why is it not able to? Could suggest that no momentum, and now eventually we break below that line. Otherwise, maybe this is just intraday up and down movement that eventually the market recovers and closes above 50 to record a strong day into the close. I hope that makes sense. Eric Mwado at mwado.com. But before I go, a couple of things. Let's conclude this video by going back to the intraday 5-minute chart that we've been watching. And as of right now, I'm going to lead you here with the Dow. And again, June 3rd, 2015. Right now, Dow is up about 60 points. And we can see that on the 5-minute chart. I didn't do this, you didn't do this, the market did this on its own. We seem to be finding support right here on the line. The market is doing that on its own, suggesting that's an area where you want to go long for an intraday scalp, for those of you who trade this time frame, which is a tough time frame to trade. And again, also on this line, here. So if you haven't watched the prior videos in this series, you might want to go and check them, because this put things in perspective. This line has been support, as we've been discussing. If that holds, expect the market to move higher. And also we are seeing right now that if this line also holds for a swing trade, you'd like to go along right here, right now, for an intraday scalping trade with the S&P 500 trading at 2112.25. Eric Mwathe, Mwathe.com. Good luck, peace, and blessings. Woo! E-I-C-S. Bam 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 bam. You still here? How come? Eric Mwathe. Bye. I am out.